Welcome to Business with Louis, the show where we break down complex business concepts into actionable advice for entrepreneurs and business students alike. Today, we're exploring one of the most critical tools in any business owner's toolkit: loans. Whether you're looking to launch a startup, scale an existing venture, or simply navigate the financial landscape of your industry, understanding loans is essential. So, what exactly are loans? In straightforward terms, a loan is when one party agrees to lend another party a sum of money with the understanding that it will be repaid, usually with interest. This concept has been around for centuries and forms the backbone of modern finance. From personal loans to business loans, the principle remains the same: accessing capital now in exchange for future payments. Let's dive into the core principles and theories behind loans. One key concept is interest rates, which determine how much extra you'll pay back over time. Influential economists like Milton Friedman have discussed how interest rates can influence economic activity. For instance, lower interest rates might encourage borrowing and spending, while higher rates could do the opposite. Our understanding of loans has evolved significantly over time, especially with the advent of digital banking and fintech, which have made accessing loans faster and more accessible than ever. Real-world examples illustrate how loans play out in practice. Consider Airbnb, which started with a small loan from investors to develop its platform. Today, it's a global phenomenon. On the other hand, companies like Blockbuster failed to adapt and were weighed down by debt, ultimately leading to their demise. Another example is Warby Parker, which used venture capital funding to scale its business model of affordable, fashionable eyewear. These stories highlight the double-edged nature of loans. They can fuel growth but also lead to financial strain if not managed carefully. So, how can you apply this knowledge in your own ventures or careers? First, it's crucial to have a solid understanding of your credit score, as it significantly affects the interest rate you'll be offered and whether you're approved for a loan. My colleagues on Wall Street always stress the importance of having a detailed business plan that outlines not just how you'll use borrowed funds, but also how you intend to generate revenue to pay back those loans. Shopping around for lenders and understanding the terms of any loan agreement before signing is also vital. Consider factors such as interest rates, fees, and repayment terms. For instance, if you're a startup with high growth potential, venture capital might be the way to go. Venture capitalists can provide not only financial support, but also valuable guidance and networking opportunities. On the other hand, if you're a small business or entrepreneur with a unique product or service, crowdfunding could be more suitable. Platforms like Kickstarter or Indiegogo allow you to raise funds from a large number of people, often in exchange for rewards or equity. Research has shown that small businesses that use debt financing strategically are more likely to experience rapid growth and increased profitability. A study by the National Bureau of Economic Research found that small businesses using debt financing grew at a rate of 15% per year, compared to 5% per year for those not using debt financing. This underlines the potential benefits of loans when used wisely. In practical terms, being aware of your financials and having a clear plan for repayment is key. Consider alternative forms of funding that might be more suitable depending on your business model and growth stage. For example, if you have a stable cash flow but need funds for expansion, a term loan could provide the necessary capital. If you're looking to manage day-to-day expenses, a line of credit might offer the flexibility you need. As we conclude our exploration of loans today, remember that borrowing is a tool that can either propel your business forward or weigh it down, depending on how wisely you use it. The key takeaway is to approach loans with a clear understanding of their potential benefits and risks. By doing so, you can make informed decisions that support the long-term health and success of your venture. That's it for today's Business with Louis. Be sure to like, share, and subscribe. And remember, every great business starts with action. Make your next move count.